welcome back. You're watching us here on Chartbusters. One of the stocks that busted the charts on Friday was Dhanlaxmi Bank. The stock was higher even as the company, registered weak loan growth in the first quarter. We had a big uptick in their gold loan book itself. We have with us Ajith Kumar KK, the MD and CEO of the company, joining us. Thanks a lot, Mr. Ajith Kumar, for joining in. You recently were appointed as the MD CEO of the company. So the first quarter so far, the 10 days that you were at the helm, they've been good, especially on the gold loan front. So let's talk about your target for the bank for this year and the medium to long term later. But for this year, what's the kind of loan growth that you're targeting along with the loan growth in your gold portfolio?
Good morning and thanks. Current year, in Q1, the numbers were quite good. Sequentially, we have grown in all major areas like advances, deposits, and with gold Y-on-Y growth recording almost 29% growth. The current year, we are forecasting a growth of around 15% for the loan book. Last year, we had grown just around 6%. So currently, the growth of around 15% in loan book and the total business growth of around 15%. Liabilities around 13%. That's what we look at. Gold, definitely we are looking for more than 20% growth during the current year. And that's one area that focus is always there. It had been there and we continue to look forward for that kind of growth. Also, the NPA book is coming down steadily with the industry at totally a low of 2.8%. I'm sure that our bank has also been showing a very positive decrease as far as the NPA book is concerned, which is going to continue in the near future as well.
All right. Hi, Mr. Kumar. First of all, welcome to the show and congratulations on taking over the bank. We wish you well in the years to come. We've got the number out in terms of loan growth, mid-teens growth, with gold outpacing that, and liability growth, I think I heard, was around 13%. Now, since you touched upon the asset quality, could you tell us the net NPAs as well as the gross NPAs? Where do you see it move? The last recorded number we have on gross NPAs is 4.05%, which is an improvement from close to around 5%. So by the end of this year, FY25, where do both these two numbers go?
Our expectation is that it is definitely going to be somewhere around 3. It will be less than 3% for the current year. And the net NPA also will be less than 1%. That's what we look at for the current year. Since the last 2 years, every year we had seen a 1% decrease in GNPA. This year also we expect a more than 1% decrease in GNPA as well as the net NPA coming down to less than 1% maybe after a very, very long time.
All right. So net NPA sub 1%, GNPA sub 3%. This number was closer to 4% at the end of the previous financial year with 15% loan growth. What does all of this mean for the margins at which the margins you make on loans? The NIMS target going forward, since gold is going to grow faster than your overall book, 15% loan growth at a time when interest rates are higher, cost of funds are higher as well. So what is your NIM target for this year?
The expectation is that from the current level of around 3.2, I think we expect it to go up by another 20 basis points, maybe somewhere around close to 3.4. That's what we look at.
All right. The problem is, Mr. Kumar, I think there were some bonds that saw a downgrade by CARE in the last week or so. Could you comment on that? And in turn, when you see a downgrade, sometimes the cost of funds goes up, which in turn could have an adverse impact on NIMS. Your comment on this?
Yeah, definitely. If any downgrade will have some impact, that's for sure. But as far as we are concerned, we are looking at certain Tier 2 bonds are getting matured in the next financial year. And we are sure and confident that those can be got replenished with almost at the same cost, we'll be able to replenish it.
So in light of that, how will NIMS increase? Are you looking at your yields on certain assets increasing? Because even, deposits are difficult to come by currently.
Yeah, I think the indication that we have during the Q1 growth is that because we have got the benefit of a small base and if we have got a network, the bank is quite well known in the regions where they are significantly present. And with these in place, I'm quite confident that our focus, because we have got our book, corporate book is not significantly high, it is somewhere around 20 to 25%. So we are not planning to increase the corporate share. Our focus will be on MSME, gold loans, to an extent, small segment in micro. And if we focus on these areas where we are traditionally strong, and if we are able to encash on this by improving the processes and coming out with new products, and because our book size for MSME is just around 2,000 crores, so if we are able to significantly improve, that's where we get higher margins. And if we can deliver credit at a faster pace, I think I'm sure that we'll be able to meet the NIM that we are budgeting.
You briefly mentioned cashing in. Given the kind of rise that we've seen in the stock price, which has more than doubled in the last 1 year, any fundraising plans?
Yeah, we have got an approval for capital raising through rights issue for 300 crores. And in the next couple of months, we plan to go ahead with this and everything is in place to take it forward.
All right, so 300 crore via rights issue. Just wanted to know, if you get that 300 crores, what does that do to your ratios, your CRAR and the Tier 1 capital?
I think Tier 1 capital will definitely be somewhere around 14%. And with a mix of Tier 2, we'll be crossing more than 15%. And that's what we are looking at. Currently, we are 12.71%, well above the regulator benchmark. But capital is something that is required for a growth as well as for meet other requirements. While we are aiming for a steady growth in the next 2 years, much more than what I've been growing during the last couple of years.
And finally, just before we let you go, we got most of the numbers out of the way. The two numbers that we didn't, one was the slippage that you're targeting or looking at this year, and what's the kind of credit cost guidance that you have?
And slippage, I mentioned the gross NPA will be around 3%. So we'll be looking at numbers, absolute numbers. Currently, the number is at around March. It was 421 crores. We are looking at a number of around 350 crores gross NPA figure. That's what, including the strengthening our collections through our existing book as well as through the technically written off book. I think we'll be able to meet a gross NPA number of around 350 crores, which will be take us to a NPA. GNPA percentage of 3% on an asset book of approximately 15,000 crores.
Okay, Mr. Kumar, we look forward to you joining on the channel far more often as well. You've been, you've patiently taken all our questions and given us some answers. We'll hold you to these guidance. But until next time, we wish you well and we look forward to having a chat with you as the quarter progresses. For the time being, slip in a short break, come back, continue our focus on markets and stocks that are moving around.